So should you be investing in individual stocks or simply investing in index funds and ETFs? Should you be making your own portfolio or should you be investing in a managed portfolio? What does any of that even mean? In this video I'm going to show you how I'm investing my money and why my investing philosophy is going through something of a revolution. Stay tuned. So hi folks, of course I'm David from prettypenny.club. I make videos to help you reach your financial goals with content on investing, passive income, frugal living, generally trying to make your money work as hard as possible for you. So subscribe if that sounds good to you. So recently I've been getting involved in a lot of chatter with friends and other folks in this space, friends on Twitter, fellow YouTubers, and people in my day-to-day life as to how best to invest all your hard-earned money in order to maximize your returns. Maximising your returns and making money in the fastest way possible is going to help you hit your financial goals as early as possible, giving you the freedom that we all want. And it's very interesting, there's lots of people who make the case for picking stocks on an individual basis, whether it be for a long-term buy and hold or a much more active approach, trading in and out of positions as they see the market move. And in picking these stocks, there is so much flexibility to consider. Things like geography, market sector, growth companies versus dividend companies. And so as you build up your portfolio, you're able to sort of maintain a real diversification amongst your stocks. Then there are others who think that trying to pick individual stocks is a losing game. And people who like the instant diversification that something like an ETF, which is an exchange traded fund, will bring. So typically an ETF will bring together a small piece of lots of different stocks and companies and put them into sort of one basket, if you like, allowing you to buy a range of stocks in a particular sector or geography in one handy holding. Popular ETFs would include things like the FTSE 100, which is the highest valued 100 companies traded on the London Stock Exchange, or the S&P 500, which is similar to the FTSE 100, but this is the top 500 companies trading in the USA. Or it could be something along the lines of a theme like the iShares Global Clean Energy ETF, which is comprised of about 104 companies involved in the clean energy space around the world. So that's pretty cool. One instrument or one stock effectively to get a piece of all these different companies in one go. So if you look at the global stock markets over the years, they have grown by somewhere between 5 and 10% per year since their inception, depending on which markets and things you're looking at. And of course that excludes the glaring exception of the Nikkei in the early 90s, but that's entirely another story. So if we see that markets go up and indices go up over time, why wouldn't you just invest in something like that and forget about it? And the simple answer is because we reckon we can do better. It is a deeply ingrained human trait that we want to be right, and even more so that we want to be better than average. So we see what we can get, let's say 10% in a year without doing too much, then it's natural to want to do better than that. And to newcomers, getting 10% on your investments over a year maybe doesn't sound like very much, especially when compared to companies like Tesla or Amazon or GameStop that have grown by so much more than that recently. Explosive gains that dwarf the average gains of the market as a whole are very, very tempting. However, for every ridiculous growth story, there are just as many losing stories that aren't making the headlines. And despite these individual companies taking off over short periods of time, it is incredibly hard to predict what companies on an individual level are going to do well and which companies won't. It's why we get all these stories of 80% of fund managers not being able to beat the index over a long period of time, and it's because they're trying to pick individual stocks and trade out and trade into positions as they see fit. So if these pros can't do it over a long period of time, what is it that makes you as a retail investor think you can do it? Now there are people who are beating the market and it can be done. Kathy Wood at ARK, for example, had an unbelievable year last year and continues to draw a lot of attention despite being down around about 3.5% this year to date. Even a friend of this channel, Stephen, over at A Journey into Stocks, well, he's in front of the market by some distance in the time that he's been posting his videos. Highly recommend you look at his channel. And with respect to Stephen, although Kathy and he are probably at different ends of the financial spectrum, they are both putting in a ton of effort, a load of time and resources into researching companies, studying their financials, reading news, getting to know the companies that they are selecting, right from the boardroom right down to the profits and forecasts of the company. That's a lot of information to chew over and it isn't for everybody. But people like Stephen are getting the rewards for that. I don't have that time and energy, nor, to be honest, the enthusiasm to build up a portfolio of well-researched stocks and maintain my knowledge over the months with what is going on with these companies. I would far rather invest in an ETF or something like that Buy all the big companies in the FTSE 100 or the S&P 500, whatever it happens to be, and just be patient. Accept my average returns and get rich slow. But maybe there's a hybrid model to be found in there somewhere, other steps that can be taken. So currently my ISA is made up of 5 ETFs, and if you want to see more about those, then check out my latest portfolio updates, and I'll link to them in the description below. But these ETFs cover a range of global markets in various different weights. So that is to say, I have different amounts of money invested in different areas. This still takes a little bit of maintenance because I have to decide how I want to spread my money. And again, there are choices based on things like research of global markets, where those markets are likely to go based on the fortunes and prospects of the companies that make up those markets. Which kind of brings me round to Invest Engine. So recently I did a video on Invest Engine, and again I'll link to that in the description below if you're looking to check it out. It's a relatively new platform to me, and I was talking about their zero fee platform for DIY portfolios. So what I like about Invest Engine is that you can build up a DIY portfolio from over 150 ETFs, including all the big names that you might be used to, like the iShares S&P 500, iShares FTSE 100, etc. So if you want those big global indices, they're there right for you just to pick and add to your basket. If you wanted something a little less well known, then something like the VanEck Global Real Estate ETF gives you exposure to global real estate companies. That's pretty cool. Adding these to a portfolio then lets you decide how much of your portfolio you want to dedicate to each slice of the pie, so to speak. Just recently, DIY portfolios are now available for your ISA, so where other platforms are charging a fee of sorts to have a stocks and shares ISA, there is absolutely no platform fees, no deposit fees, nothing extra to pay for having a DIY ISA with Invest Engine. It's a great chance to buy a piece in a range of markets without having your capital eroded by depositing fees or service fees or anything like that. The issue with DIY portfolios is you still have to manage them. Stay on top of news, rebalance where appropriate, react to a changing financial world in some cases. And if this sounds scary or a bit intimidating, you might choose to spend 0.25% of your investment on having a managed portfolio. The difference between Invest Engine's management and a fund manager picking stocks in the bricks and mortar world is that Invest Engine, in their own words, are aiming to be the market. They are much cheaper than your average investment manager, and they aren't trying to make unrealistic claims on how much you are going to make. Of course, investing with any platform, your capital is at risk. Stocks can go up and down, and so go in with your eyes open. And when you start any new investment, speak to a professional if you are in any doubt whatsoever about what you're doing. I actually know a couple of guys through YouTube that are in this line of work, Chris Bourne and Tom Morgan. I'll link to their channels down below. Great guys, so if you've got any questions or you want to talk to them in a professional capacity, give them a shout. Good lads. Anyway, back to Invest Engine. If you haven't already got an account there, they are offering a £50 bonus when you invest £100, and that's offers on up until the 25th of August. Hey folks, Future David here. So the offer of £50 for £100 when you sign up with Invest Engine has actually been extended to the end of September. That news didn't come to me until after I'd finished the video. So that's pretty good. You've got plenty of time to get in with that offer if that's what you're looking for. Back to the video. Use my link in the description below. I will get a little bit of kickback from them, so you can help support this channel while you get started on your investing journey. So look, I've mentioned them before and I'm very impressed by what's going on at Invest Engine. I think they are taking a very refreshing approach to investing. They are regulated, of course, by the FCA, offering entirely free ISAs, and they take part in the FSCS scheme, so your investment is protected up to £85,000 should things go really sideways for whatever reason. I've gotten slightly off topic, but what I'm saying is this: be mindful of all the hype you read online about picking individual stocks. There are very few people lining up to tell you how they have failed miserably at it. I even have a couple of videos on free trade where I tried to do this for a little while myself and it's been dismal. But Stephen, as I mentioned earlier, has kept his progress public since I've known his channel, but there are many folks out there who have a big couple of months and then just disappear, presumably because it didn't work out. It's incredibly tough to do, and for me personally, I'll stick to index investing in the main. I mentioned at the start of the video that my investing philosophy is going through something of a revolution. I started life picking stocks and did okay. Mostly though, I was investing in a bull market and hand on heart, wasn't really keeping up with all the info that I probably should. And the thing about investing in a bull market is that you can very quickly bluff yourself into thinking you're an absolute genius, but everything's going up. Since about March or April last year, you could have thrown a dart at anything in the stock market and you would probably be sitting on a profit right now. There are of course exceptions, but a bull market will make you think you're doing much better than you really are. So after that initial blowout 6 months, then pretty much all my investing for the last year has been done with ETFs. And even now, just in the last few months, I've realised that even that takes a little bit of work and knowledge about what's going on in the world. I want my investing to be as simple as possible, so personally, I'll not be going back to stock picking. It doesn't suit me, it doesn't suit my lifestyle. I'm comfortable throwing money at the market as a whole every month consistently and just letting the world keep on turning. Invest Engine looks like they could really fill that job for me with a managed portfolio of ETFs, not individual stocks, and I'll be giving serious thought to moving my ISA there next year. As ever, any questions, let me know in the comments below. If you have received any value from this video, the best thing you can do is give it a like, subscribe for more money content like this, and even share it on your socials if you're feeling really great about it. Don't forget the link below to get £50 on a £100 investment for 12 months until 25th of August. Thanks very much for watching. I'll see you in the next one.